You probably have seen those flashy ads, cash in 15 minutes, keep your car. If you've ever seen a sign or online ad like that, you may know what a title loan is. But you might be asking yourself, what's the real cost of taking out that kind of loan? That's what we're gonna be talking about today, because there's a lot that they are not going to tell you. Hey y'all, Marc Russell here. I'm a financial wellness board member with National Debt Relief. Before the features in Time, CNBC, and Forbes, I was a guy buried in $80,000 of debt. So yes, believe me when I say I know how it feels when money is tight. Right now, I'm proud to say I'm 100% debt-free, and I'm on a mission to make complex financial terms that you hear every single day. I want to make them easy so you can make smarter money moves. And that's why today I'm going to break down the truth about title loans, how they work, what lenders don't highlight, and other ways to get through a cash crunch without risking your vehicle. And if you're already in a title loan, you're probably going to stay with me until the end, because I'll share a simple exit plan, plus I'll share where debt relief does and does not potentially fit in. But first, let's talk about what a title loan is and how it really works. For a start, a title loan lets you borrow against your paid off car. You hand over the vehicle title, not the car itself, and the lender places a lien on it until you repay. Loan amounts are often a fraction of the car's resale value. You'll usually need ID, proof of income, insurance, and yes, sometimes a spare key. What they generally don't need is proof of credit, which make title loans appeal so big for people who have a credit score that isn't that great. Then the cost. Title loans are notorious for their double-digit APRs. That means for the amount of money you get, the interest rate is just flat out extreme and out of control. Often these interest rates are marketed as a fee for 30 days, for example, 25% of the loan amount, but that annual fee translates to a very high annual interest if you renew or roll over the loan. Most title loans are of a relatively short-term nature, meaning that they're often only about 15 to 30 days and are generally structured with a few high-cost installments. Then, if you can't pay the lump sum on the due date, you're offered a rollover, which basically means you pay another fee to extend the loan. Crazy, right? That, my friends, is where many borrowers, they get trapped, and that's where the notorious debt cycle begins. Let's show how it works with a quick example. If you borrow $1,000 with a 25% monthly fee, if you pay the $1,250, $1,000 being principal and then $250 being the fee, at the end of the month, that's that. Done. Finito. Nothing to worry about. But what if you cannot pay the lump sum on the due date at the end of the first month? Then you can roll it over, but you have to pay the fee still to keep your vehicle, of course. That has you spending $250 per month in fees while your $1,000 principal doesn't move, just to keep your means of transportation. Then if you roll that over for, let's say, 5 months, you will pay $250 per month or $1,250 in fees. And if you're doing the math, that's more than what you borrowed. And you still owe all the original $1,000. That, my friends, is the trap. And you can probably see how things can get a little nasty. Get cash now, keep your car. Almost sounds too good to be true, right? Here's what they don't tell you. Beyond the headline fee, you can see charges for lien records, origination, processing, credit checks, late fees, maintenance, even GPS or starter interrupt devices. If your loan defaults, you can also be billed for repossession, towing, storage, and auction fees. Any missed payments and the lender can repossess your car, sometimes remotely disabling it first if your vehicle has a starter interrupt installed. And at this point, your brain is probably like, and I don't have to remind you, but losing your car can mean losing your commute, getting your kid to childcare, and possibly your income. Even after the car is auctioned, you may still owe a deficiency balance if the sale doesn't cover the debt plus the fees. And here's the rollover cycle. Title loans are designed to be easy to extend, and each extension keeps you in debt and piles on fees. Many borrowers end up paying multiples of what they borrowed without meaningfully reducing the principal. Some title lenders don't report on-time payments the way Main Street lenders do. So making payments may not help you build a positive credit history, while defaults, collections, and judgments can hurt. Title loans are fast and can give you quick cash if you're in a crunch, but the fine print is where they can get expensive and very risky. That's why I want to explore some alternatives with you whenever you're in a quick need for some cash. It goes from options where you don't even have to borrow to finding low-cost forms of credit. To find $100 fast in your budget, do a 30-minute audit and cancel unused subscriptions, downgrade your phone, phone, maybe downgrade your internet to what you actually need, shop for cheaper car insurance, and maybe meal prep for 2 weeks with generics, or even batch cooking. And I love this one, sell one thing. List an unused item today and send the proceeds directly to the bill. If you need to borrow, start with no interest options first. Call your billers if you're borrowing to pay for some of your bills. Consider asking your billers for payment plans, maybe shifting the due dates, or a one-time courtesy credit for things like utilities, phone, internet, insurance. Many providers have hardship programs, especially for medical bills. And remember to always get the new terms in writing. Check community resources. Dial 211 or visit local nonprofits or faith organizations for emergency help with rent, utilities, or groceries. Then, if you must borrow, look for a lower cost credit. For example, credit unions, small dollar loans. Local credit unions often offer simpler, lower rate, small loans compared to title lenders with clear payments and no car lien. You can do an auto refinance. And no, this is not another title loan. If you own your car outright, ask a credit union about a standard auto loan using the car as collateral at a much lower rate to pay off the title loan and amortize the balance on a normal schedule. Are you already in a title loan and looking to get out? Here's an exit plan in 6 quick steps. Try to pay off your loan so you don't have rollovers. Each extension digs the debt hole deeper, and deeper. Call the lender, ask for a workable payment plan that potentially reduces principal and get that in writing. Or you can refinance out. Talk to a credit union about replacing your title loan with a lower rate auto loan. Bring proof of income, insurance, and the payoff amount. This will keep the amount of your principal loan the same, but could get you favorable terms on your loan. You can even negotiate your fees. If you're close to paying off your principal, ask the lender to waive part of the fees to settle. In the title loan market, it's a practice that often works. Protect the car, keep insurance current, and don't ignore repo notices. If the lender threatens repossession, know your state's rules about notice and redemption, as you often have a limited window to catch up or reclaim the vehicle. Get rid of other debts. If your credit card, medical bills, or personal loans are squeezing your budget and forcing the title loan in the first place, paying those off can free up cash to kill the title balances. If getting out that vicious debt cycle becomes too overwhelming and you're actively looking for help, know that there are companies out there that can help you. One of those debt relief companies, National Debt Relief, can help you by showing you the path towards becoming debt-free and even take you there by hand if needed. Just to be clear though, no, National Debt Relief does not enroll secure debts like title loans. But if unsecured debts like credit cards, medical bills, personal loans are the reason why cash is so tight, National Debt Relief can help you build a plan to reduce and resolve those unsecured balances through debt settlement. And it's not another loan, it's a system to help you get rid of your debts. It starts with a free, no obligation consultation, and fees are only charged after a successful settlement. For many people, lowering unsecured debts free up room to handle essential costs without having to take out any new high-risk loans. Next is debt settlement. If consolidation or bankruptcy is a better fit for your overall situation, one of their in-house debt experts will say so. The goal here is clarity and a path forward, not a one-size-fits-all pitch. Well, there it is. Now you know how these title loans work. They want your car title to give you some fast cash, which could be helpful, but it comes at a cost of high fees, rollovers, and repossession risk. Before you sign, it could be fruitful to try no interest options, community help, and lower cost credit from a credit union. And if you're already in one and looking for a way out, focus on stopping rollovers, negotiating a payoff path, and even refinancing out. If unsecured debts are the reason why you took out the title loan in the first place, getting those under control can be the lever that keeps you out of the title loan debt trap for good, with or without the help of a debt relief company. If you like a clear, no pressure look at your options to finally become debt free, head to www.nationaldebtrelief.com and schedule a free, no strings attached consultation call with one of their in-house debt experts. Remember, you don't have to be alone in this journey and don't have to be stuck. There's a way out, and if you need help, you can just reach out. I hope this video has helped you get crystal clear on what a title loan is and what to look out for. And if you happen to have any other questions regarding any other financial related topic, check out the other videos in this series on National Debt Relief YouTube channel. The goal of this channel is to make complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you in the next video.